Um, all right. Well, thank you guys so much for being here today and our August wealth management webinar, where we're going to alter the format a little bit and really focus on the investment piece and then just the Fidelity transition. And some of you guys who have accounts that are already at Fidelity, or maybe you had an account that was at LPL and it's already at Fidelity, you're welcome to stay on for all of that. But as I was talking with one of the gentlemen beforehand, that information is really not all that important. But if your account's still at LPL and you're wondering where your documents may be, how to sign the documents, why something may be incorrect, why you might get documents at different times, we'll have a discussion about that, and everyone's welcome to join, but specifically targeted towards people that are in those situations. So hope you guys are doing well, and I will go ahead and start with this month's update. Hold on here. All right, so the two things we'll be covering today are the economic update and, of course, the transition to Fidelity we've talked about. And so much of the economic, and it's really a financial update about y'all's accounts, because we're not trying to be economists. We're trying to manage money and really specifically manage it in a manner that lets you meet your financial goals, so in a financial planning manner. Meaning the investments we've chosen for you make sense because of your time horizon and risk tolerance, things like that, but may not make sense for everybody on this call. And so what we're talking about here is aggregate market things in general that are the same for everyone on this call. We might just be dealing with them differently in each of your plans. So economic growth, obviously now we have last year's number and it outperformed due to, as we said, a lot of the pandemic stimulus. And I feel like we're really in the first year that we're coming out, and at least to me, that feels normal from a data perspective and really for businesses being able to forecast. Interest rates have gone down a little bit this year. That's been a huge catalyst on stocks. Also, inflation has declined. Inflation's always a very strange statistic because a lot of it is what time frame are you talking about? So yes, things are significantly more than they were in 2019 or 20. 20 especially because of the way things fell off a cliff with certain products like gasoline. But they're a lot less in a lot of situations than even 12 months ago. So if you think about it, if you're paying $5 a gallon now, you're at $4 a gallon. By definition, that's less. So it depends on how you frame that. And of course, what matters is how it feels. It doesn't feel like there's not much inflation to a lot of people. Geopolitical risks, we all know those have heightened, and all that's doing is making it more and more attractive to invest in the U.S., especially for us that live here. That is not really a bad thing. It just means we weight the portfolio even more than average towards the U.S., and we'll always pretty much be favoring that, unless the world outlook changes significantly. Then with the stock market rising so much, one of the things you'll see in that is not that all the valuations are stretched, but a lot of the increase we've had is because of that interest rate decrease and just a normal change in valuations having to do with that. And then one thing we're seeing in the bond market, and this is a warning, I'm going to pause right here and let all of y'all read what the bond market says. Okay, as y'all's advisor, I will tell you this is the time where you're not going to lose money if you don't listen to this advice, but I think 2 years from now, you're going to go, oh, sometime in the 3 to 6 months following when David said this, he was right. So really and truly, the bond market is forecasting lower short-term rates in the near future. And what that'll do is get the yield on things like CDs and money markets down significantly fast. And at that time, things that are in those types of instruments will probably want to get repositioned to things like bonds or structured notes, which really aren't that much riskier. But they're going to have a much higher return. And then also sector performance, we are focusing on the fact that technology has led And so we're really trying to look if we're on that sector in any quality of the balance sheet. So that's the overall outlook. I will pause for any thoughts and questions from the group. That was a lot of information fast, and we're going to go into more specifics on the next few slides, but I thought this might be a good time for some feedback. And Juliana, will you check the chat?
Yes, we only have one question.
This is Mitch.
Oh, go ahead.
No, you can go first.
No, I was just saying that we only have one question about the accounts. So please go
Okay.
ahead. Sorry about that, to cut you off.
Okay. Yeah, David, I was wanting to know if you were going to have any insights into what's going on with the digital, the cryptocurrency, because I'm starting to, when we talk about the amount of borrowing that we've done and the interest on that, and the opportunity that looks like might be happening with what's going to be a world currency. I thought you might have some insights you could share with me or us.
Not that I would thoroughly talk about in front of a whole group of people with diverse situations. I will say in general, I'm not going so far as to say don't put any of your money in crypto, but I will say with confidence, I am not going to put anybody's money in crypto, and I do not put any of my own money in crypto. I don't. World currency, not world currency, euro, yen, Bitcoin, Luthria. The whole issue is you don't really want to invest in currency. So I don't want to own any of them. And I want to transition currency into owning companies that sell goods and services or pay me interest in bonds. That's really how traditionally you make wealth. And then that way you don't have to worry about the whole currency game, in my opinion. And there's a lot of things, including the way the economy in the world markets actually work, that would say our debt isn't as big of a problem as we may fear it is in individuals. And the biggest answer I would have on that is that most of us view the government's budget the way we do our own balance sheets and the way you would as a household. And I tell you what, if you viewed even the balance sheet of a successful company like Apple or Google, you'd be amazed how different it looks and how much debt they carry. And the reason they do that is to maximize return, and invest in things. So anyway, I don't think it's as scary as, is it not a problem at all? No, it is. But do we need to start buying Bitcoin? No. Or another currency, that's my thought. All right. That was a little side note, but I love talking about that topic. Thanks. All right. Anybody else?
Move all of that so I can put my bills in.
All right. I will get going. And I paid them to tee that one up for me. All right. So anyway, here's what's going on in the interest rate. So if you read this, this is the Fed funds rate, or the what's known as the Fed rate. So it's the 10-year Treasury minus the 2-year Treasury. It's basically an averaging of the interest rate yield, if you look at that. And so the market is pricing in, as they have been for a long time, interest rate cuts. And yes, they have been for a long time pricing in rate cuts, and that has just moved out, not really happened. But they've never priced in rate increases that I'm aware of, and in this cycle, of course. And seeing that lets me know what I've said to you guys many times in your review meetings, which is it's always easy to say what will happen in finance. It's very hard to say when. And it's also easy to say how it'll happen sometimes, but it's really hard to say when. So what will happen? I think interest rates will go down. How will it happen? The Fed will start lowering interest rates because the market starts pulling them down, and we start getting a weaker jobs market and a little bit of weakness in the stock market, and they feel okay. They could be doing it, and we'll see this varying opinions on time. We'll see that later. And then that's the how. And then finally, they're lowered, and that's what it's showing us. So what that's really telling us, and we are doing this automatically in your bond portfolios, is lengthening the maturities, because if that happens, the longer term bonds will really take off and make a lot of money. And that's really where you're trying to maybe use those CDs and cash tools in the short term, but really probably go somewhere else in the 12 to 24-month time frame. Okay. And then back to yield curves again. One of the things that's really positive about the US right now is not only can we invest in here and get the best credit quality, but we can also get the highest yield. And there's a variety of factors going into that, but one thing that you're looking at right now that does factor into that is the US dollar being really significantly high. And so, the only time that's really great for you as a US citizen is when you travel internationally. And so if you want to book an international trip, man, notice a lot of people are doing that these days. The prices look good. But this does slow down certain other things and is a sign and a catalyst for yet one more reason the Fed would want to lower rates.
You don't have to do it right now if you don't want to.
Yeah, there's nothing in there.
And then one thing I was going to say here, as far as the multiple on these different areas and valuations, the Magnificent Seven minus Tesla's continuing to continue. And then small cap's an interesting one. We do think there's some long-term structural changes in that area because private equity is becoming so prevalent, and a lot of people are using that versus public markets. But right now, there's a lot of good opportunities in the public markets because those assets have not really been loved on and really been kind of ignored over the last few years. And then obviously, large cap growth has been the hero story, and the momentum there just still continues to be real strong. So we are emphasizing that. And then finally, and I thought this was great to point out here, slower economic growth and declining rates may still be best managed by global technology cost benefiting from AI tailwind. Sorry, I noticed the typo there. But when you think of what that's really saying, and this would be just an amazing feat, even if AI doesn't go any further than it is today. And all that happens is we take today's technology and figure out how to apply it more efficiently. One thing that in the history of economies we've tracked that's always been a negative is an aging economy, which unfortunately, if you look at the birth rate in the United States, we do run that risk down the road. And I actually think 50 years from now, that's probably our biggest economic risk. So, back to the Bitcoin question, I'm not sure how Bitcoin does or doesn't impact our birth rate, but I do know millennials like it and we need them to have babies. So with that said, if AI can replace that so you don't need as many people in certain jobs, it's really not a negative thing economically or for financial markets when you think about it as an investor. It's actually a really positive thing. So that's another tailwind. And that is all we have on the investment side of things. So I will pause before moving over to the Fidelity update for any thoughts and questions.
Hey, Dave, Juliana, Sean here. Got a quick question. Hey, with this thing coming up in November, this big election coming up in November, not sure if you touched on it before. I just wasn't sure kind of your thoughts on that as we go into the market, if we should be, I know it depends on age and where we're at retirement and all that. Just wasn't sure how you guys are looking at that, as if we should take more of a conservative approach, kind of see how things pan out. I think there's a lot of uncertainty there. Who's actually
I can tell you facts and I can tell you personal opinions. So which do you want first?
Let's go with facts first, then end it on personal opinions. Yeah. Okay.
If you look historically over time, so this has nothing to do with looking in the future of these two candidates, but historically over time, there's almost no correlation to performance of the stock market and bond market and who's in office, whether it be a president or Democrat or Republican, or Congress belonging to Democrats and Republicans. In fact, historically, whether this is coincidence or it's a sweet spot, the best performing is a Democrat president with a Republican Congress and Republican Senate. So I'm not sure that that means that's what we should all hope for is investors, or it means nothing. But that's the truth. And I do think the reason it very much doesn't correlate is, yes, from a political standpoint, we think that our parties are so far apart. From an economic standpoint, they're not really that far apart.
Okay.
I mean, people, you'll talk, I talked to one client, we ended up not doing business with him because he was, had some French issues as far as expatriate tax things that are way out of our league. But he's from France, and he's like, yeah, America thinks we are socialists. We think we are capitalists, but I just tell Americans we're socialists because I don't want to get in an argument. So think about what that means. You know, sometimes what we think is socialism is really capitalism.
Right.
So yeah, I think we're going to be fine. Now, do y'all want opinions? I mean, they're completely valid, or invalid. All that means is, you know, I have elbows. Great. I'm like everybody else on the call.
I like an opinion. Yeah, I like facts. Yeah, so we got the facts down. That makes me feel better. Yeah, I'll take your opinion. That's why we like you. That's why we like you.
I personally think, and this is only on an investing standpoint, I'm not talking about any other issues, Trump would be better for the stock market. I think Kamala, though, should be viewed as just a, you know, general Democrat. So it's Donald Trump versus generic Democrat. And you can demonize her or say whatever one way or the other. Maybe you don't like the way she talks, but just view her as a generic Democrat. And so what would happen in a generic Democrat scenario is you would basically probably expect average returns in the market that we've had. There you go. And that's what I think you get from her. I think with Trump, he has a tendency that may even be dangerous and to the point where it could really, really hurt the president after him. And everybody goes, oh, this guy's terrible for the market, whoever it is. But if Trump had 8 years, he would eventually be terrible if he does this. He has a tendency to try to put as much gas as possible on the economy. And that looks freaking amazing until it doesn't. And then it crashes like a daggum train into a brick wall. So we'll just see if, you know, depending on where he goes, you know, what all happens. And then you got to pair whoever's in office with Congress who may or may not let him do all this. So, you know, if you have Trump in office but a Democratic, you know, Congress, you're not going to have him have the same freedom as if it's a Republican. So we'll see.
Cool.
Either way, I'm not scared. And I think you're getting positive returns. Worst case scenario, average ones.
Okay. Good. Well, I appreciate it. Thank you.
David, we have a question from, I think it's
I
more.
was reading it.
Yes, and your camera is actually off. I don't know if you knew that.
Oh, no, I didn't know that. I think I meant to, I didn't, sorry. I meant to stop sharing. I didn't mean to turn my camera off. All right. Okay, anybody else? Otherwise, we'll get on to Fidelity. All right, the most exciting stuff. Literally, if I could go through the rest of my career with never doing a broker-dealer change, I would absolutely do that. And guess what? This Fidelity transition makes it possible because under this NFS window, if we ever need broker-dealers, they have 20 plus that you can get without ever having to do what we did again. So I will open up for any thoughts and questions. I will start with the one we already got here on the Fidelity transfer. So first of all, anyone on this call, I would be surprised if you don't know about the transfer, haven't gotten email correspondence, seen last month's webinar, actually signed your paperwork for merit, you know, et cetera. In case you haven't, what's going on is for any of our clients that have assets at LPL, financial, or use them as a broker-dealer. A broker-dealer is kind of a middleman between us and a direct investment company. So like a investment held directly at a mutual fund, a brokered CD, an annuity, just holding stock in an account but not charging any fee, things like that. That would be considered broker-dealer stuff. That's on the NFS side. And we're ending that relationship with LPL, moving it to Fidelity and what they call NFS, which if you AT&T folks or anyone with the Fidelity 401k, if you ever get a rollover check, which we used to do, pre everything going electronic, it would actually be from NFS for the benefit of John Doe or whoever's made out to. So let's start with the first question. How do you see your accounts once they're transferred to Fidelity? That is very easy, actually. You would go to the Fidelity website, fidelity.com, and just hit create an account or need to set up credentials and literally walk through it with your social security number and address, and they'll have it. They also, and this is something I love about Fidelity versus LPL. LPL didn't really have a back office people can reach out to. They had to use us, and that was great. But I will say we're not as good as the people at Fidelity at knowing the Fidelity website, and that's what's awesome about them is you can actually call them, and I think get better and quicker service than from us, who may have to do a little research, even though we do want to help you. Happy to do the research, but you can call that Fidelity number. Once you get that login, it should show up automatically from your social security number in any accounts you have, including old 401ks if you have any from Fidelity. Now, the main question we also get from that is, how do I see my spouse's account? And that's a little bit different. You both have to, at Fidelity, call up that 1-800 number that's on there, both be on the line and just give authorization. And then you'll see it and you'll have a separate heading under there that says authorized accounts. So just know that step might be needed and take those. Okay. What other questions did we have come in? Anything, Juliana?
Not that I know of, just a comment, but that was about just elections.
Okay. Well, I will say most people should have gotten their paperwork. If you haven't, don't worry, it will come. Unfortunately, with the volume, we're able to do it at a pace of about 500 a day. 1,000, I think, is the most. And as a whole company nationwide, we have a lot more accounts. And when you think of it, a lot of our clients, like we may have one client, but they may have 7 or 8 accounts in certain situations. So, you take somebody like myself, I have an UTMA for both of my kids, 529 for both of my kids, my Roth IRA, my wife's Roth IRA, brokerage. And it's like, okay, even though they're all tiny, it's a lot of paperwork. It's just as much paperwork as moving, larger accounts. So anyway, thank you for bearing with us. And anything that's that brokerage side of the business, that paperwork does come a little bit later. And so if you get one set for an account that's considered a fee-based or fee-only advisory account and another one later, that's the reason why. And on any of this stuff, if you have any questions, do give us a call. A lot of the simple things like missed phone numbers and stuff, what we did is uploaded a spreadsheet and then actually gave that to Fidelity, and they used a third party to upload it. And we found somewhere in there a few digits may have been off. All that stuff can get changed, and it can get changed by us or you electronically. And you can certainly send us an email. But I'm saying that even after the account's open, or if you need it changed on the front end, just let us know. Okay.
I think John had a question. He raised his hand, or maybe he's just trying to give you a high five.
Well, cool. Well, let's ask. John, do you have a question?
I think you have to unmute yourself, John. Let me see if I can unmute you. Oh, I cannot. John, will you unmute yourself?
Okay. Can you hear me now?
Yes, we can.
Okay, good. David, when signing the paperwork, I noticed there were some zeros missing. When they were showing the balance, it didn't show the full balance.
I know this is a funny thing. So first of all, that's an embarrassing mistake. I'm sorry you saw that. Second of all, it does not matter at all because what they're going to do is transfer over 100% of the assets, and it could say $10, and if there's $1 million in the account, the transfer is going to end up being for $1 million. And then we'll do a residual sweep from anything at LPL. Plus, I mean, this always happens, but LPL by law has to send all the money when they get a full transfer, and with us on both sides of the trade, we'll be watching to make sure that happens in a timely manner. So I do apologize for that, and I assume there is somebody somewhere working for $15 an hour whose hand we could slap for putting that zero in there wrong.
Well, it normally, when you see something like that, it's the amount, and then up in parentheses it says thousands, or has the zeros out there. This did not. This just had 100 and so much amount.
And I hate the.
There's some thousands missing here.
Yeah, that makes a big difference. But I hate to bust someone else's bubble one day. If we did it the other direction and put too many zeros, $10 million on that does not mean if you had $1 million and we transfer it over, it's going to really be 10 times that. So either way, the mistake does not work for you or against you.
Okay. All right. So we're cool. We're good.
Cool.
Thanks, Dave.
At the end of this, did anybody listen to Clark Howard's Clark Sucks segment?
No.
I think it's hilarious. He does it on Friday afternoons. Basically, people are allowed to call in and tell him stuff he screwed up that week or like information he gave that was out. And, I feel like Merritt deserves one of those after the broker-dealer change, and then we'd all just be pure, purged of this issue.
We should put that as an agenda item for the next call, Dave.
I like it. Yeah. Instead of having a guest, we'll just have a Festivus.
Hey, David, this is Mitch. I have an unrelated question for you
Great.
that you might be able to help me with. I've got less than $5 remaining in my health savings account, and I can't find a way to get it to zero out the balance because you can't use anything less than that. Do I need to is there some form I can do or whatever?
I don't know. Here's what I think you could do is why not submit like $100 receipt and just have them send you $5? Because you can submit a receipt that's bigger than the amount you're getting.
Thank you. That's a great suggestion. I'll take it.
Yeah.
Tell Doug Gober I said hi.
Hey. Yeah, when you come on these webinars, if you put your name in there, it's in peril. I'm surprised some of you don't have like aliases.
Well, hey, this is Doug. Hey, back at you.
Some of us had to get our picture that shows up from the post office wall.
I bet you have a mugshot somewhere, and that would be really funny if you uploaded it.
Never convicted.
Well, I knew you had the mugshot.
Mugshot, yes. Conviction, no. But I am convinced and convicted that in all the number of years that I've had the privilege of working with not only yourself but Merritt, that the whole organization has done a fine job. I was a little concerned when Fidelity was taking over the LPL, but you did a good job of explaining the hows and the whys in the last seminar and in our personal conversations. And I've got the full confidence in the world that you and your team will continue to make money not only for me, but for all these other good folks, and enough so little Miss Juliana can have a nice supper one night.